Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is the Kickstart video for today's date, July 11, 2024. The Kickstart video takes a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. We did have some fundamental news come out this morning with CPI coming in weaker than expected, and it has a dollar moving to the downside. Yields are also moving lower. So let's get started. I mentioned that yields are lower. The 10-year yield is now down, looks like 7.8 basis points, and the 30-year yield is down 5 basis points. 30-year yield is important. Why? Because we have an auction coming coming up at 1 p.m. Eastern Time in the United States, where they will auction off 30-year bonds. Yesterday, they auctioned off 10-year bonds. So the owners of those bonds are feeling good today because the bond prices are higher, yields are lower after the CPI data came in weaker than expected. As mentioned, the dollar is also moving lower, and looking at the euro versus US dollar, we've now broken above this swing area up through here, defined by other swing lows and swing highs going back in time. We also broke above this trend line right through here. This trend line cuts across at 1.0887, and the current price is trading at 1.0890. So we're just above that level after moving, looks like to a high near the 109 level in the euro versus US dollar. On the top side, we have this high price going back to June 4th, which came in at 1.0915. That's going to be the next key target on the top side. And then we start to look at other highs, including this high right here at 1.0941 and 1.0963 and 1.0981. The high price for the year was I think back here on well, this is January 5th. This is January 2nd, so it really even goes higher up here, but these levels come in around the 110 level. Nice round number up there that perhaps the dollar is going toward, the euro versus US dollar moving toward. If the bias can remain to the upside, I would characterize a risk down to the 1.08758 level now. That's the low of this swing area going back in time. It's pretty much developed through here. Mainly, we did have swing high here, swing high right here, swing high right here. Got a little choppy through here as we were breaking to the upside. But anyway, watch around the 108.75 level is a support level for any sort of corrective move to the downside, but we do need to. It would be great if we could stay above this trend line right here near the 1.0887 level for the euro versus US dollar. Let's take a look at the dollar versus yen, and it moved sharply to the downside here off of the numbers after testing the high price for the year, the high price from last week at 161.93 over the last few days, including right before the number. The price has since moved down and broken below the 100 bar moving average on the 4-hour chart. We also fell below this key 160.21 level. That level corresponds with this high price going back to April, end of April. That was our swing high right here before we had intervention from the Bank of Japan that forced price down through here to their low price of 151.90. And then we've been starting to build to the upside, including this trend-like move since the beginning of June. We did correct down to that 160.21 level, which was a nice hold here and here and here and here, including this week's earlier this week. But the break of that 160.21 level now has traders thinking more in terms of sell the rallies against that level. What was once a resistance and then became support now becomes resistance again. The price low did break below the 200 bar moving average on the 4-hour chart, but only briefly. And we also moved short of the 50% retracement of this move to the upside here, which is a good hold on the downside. So there is somewhat of a battle going on. But I would expect that if the price were to move higher, that we'd see sellers against on any sort of move to the upside. But getting below 200 bar moving average of 50% retracement of this last trend move to the upside would certainly give the sellers more confidence to the downside for this currency pair, at least in the short term for the dollar versus yen. Let's take a look at the sterling versus US dollar. And we'll look at the 4-hour chart. And as you can see, we're breaking to above this high price that we saw in early March at 128.93. Going to the daily chart, where does that put us? Well, it puts us at puts us at the highest level since this point right here, which is July of 2023 for the pound versus US dollar. New highs for the year, new highs going back to July of 2023. The next target on the top side off of this daily chart comes in 129.95, just short of the natural level at 130. Support now is at, off this daily chart, is at 128.93, which is the old high that we had going back to this period, I guess at the end of February, early March, right here at 128.93. So next target on the top side, next support level on the downside off of the daily chart. Going back to the 4-hour chart, there really is nothing that traders can grasp onto, perhaps as a support or a target level. Maybe you can connect the highs through here and look for new highs up through here, probably around the 129.65-ish type level on the top side. But one thing that when you have a sharp move to the upside trading to new highs, what you may want to do is also look at something like the 5-minute chart to see where the sellers start to take control, at least in the short term, very short term. And as you can see off this chart right here, what is interesting off of this chart is notice here how the price based against the 100 and 200 bar moving averages on this 5-minute chart trended. And trading here today, what do? We found support against the 100 bar moving average here, and even here right before the number, before the market swung to the upside. So that is good news for the buyers, at least from a technical perspective. Now, another technique I like to use is putting a Fibonacci on the trend-like move here. This is a sharp move to the upside. And what traders often do is look for the 38.2 to 50% retracement of this trend move to hold support now. It doesn't make sense that we'd wait all the way down to here for the full retracement. If the price starts to go below the 38.2 to 50% correction level of the last trend move to the upside, it's saying to me that the buyers through here are really not in love with the market. If they were in love with the market, people who didn't get on this move to the upside because maybe the risk of the CPI data have an opportunity to buy it at a discount of 38.2 to 50%. That's where they should come in off of a corrective move after a move that they missed the upside. So look for the buyers to show up in this area. If they don't, then things are a little bit wonky in the sterling versus US dollar after the move to the upside. So be aware of this level between 129.17 and 129.08. If the price were to head on down toward that level, look for dip buyers to put their toe in the water, see if they can buy a dip off of that corrective move. So there you have it. A look at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.